All right, let's dive right in. Today, we're taking a close look at IHI Corporation, one of Japan's biggest industrial players. And boy, did their first quarter earnings report make some waves. It really sent a jolt through the market, so we're going to break down exactly what went down.
So, this really brings us to the big question, right? Is this just a bad quarter, a temporary stumble for a massive company like this? Or is there something else going on here? Could this surprise miss actually be a huge opportunity for anyone who's really paying attention?
Okay, let's just start with the number that made everyone's head turn, a negative 36%. That's how much IHI's earnings per share missed what the analysts were predicting. I mean, a miss that big? Yeah, you've got to take a closer look.
So yeah, this was definitely a surprising stumble. Let's dig into what caused it.
All right, let's get behind the numbers, because that headline figure, well, it's just the tip of the iceberg. The story is way more complex than that. And it wasn't just profit that took a hit. Revenue also missed the mark by almost 18 billion yen. So what does that tell us? It means the problem wasn't just about costs getting out of control. Nope, the money coming in the door, the top line, it took a real hit too. So why the big shortfall? Well, management basically pointed to two main culprits. First off, last year they had these huge one-off projects that just weren't on the books this time around. And second, the yen got stronger, which sounds good, but it actually means all their money from overseas was worth less when they brought it back home to Japan. But, and this is a huge but, here's the twist. While revenue and profit were tanking, their future business absolutely exploded. Get this. New orders were up by a massive 95.6 billion yen compared to last year. So now you've got this really mixed picture, right? It kind of suggests that people still want what IHI is selling. I mean, demand is super strong. It's just that the timing of some big projects really messed with this one quarter. To really get what's happening at IHI, you have to look inside. It's almost like a tale of two companies under one roof. One part is absolutely soaring, while the other part is really fighting against some serious headwinds.
Yeah, the company's performance is really split right down the middle. On one side, you've got the high flyers. We're talking about their aero, space, and defense business. I mean, this segment is just killing it. Sales for spare parts alone were up more than 20%. That's a fantastic sign for the whole airline industry, by the way. But then, you've got the other side of the story, the headwinds. This is their resources, energy, and environment business, and it is really struggling. It's getting dragged down by some big upfront costs on nuclear projects, and some of their overseas businesses just aren't performing well.
So with all this going on, how is IHI supposed to respond? Well, even with this rough quarter, management came out with a very clear plan. They're not just sitting around, they're looking to tackle these challenges head-on and really streamline the company for the future. And their plan has three key parts. First, they're doing a 7-for-1 stock split. We'll get to what that means in a sec. Second, they're selling off businesses that aren't part of their main focus. And third, they're merging a couple of their infrastructure units to be more efficient. Honestly, it's a pretty classic playbook when a big company wants to get lean and refocus. And hey, for anyone who's not totally sure what a stock split is, think of it like this. It's like taking a pizza and cutting it into more slices. The pizza itself, the company's total value, doesn't change one bit. But each slice, or each share, is now smaller and cheaper. That makes it easier for more people to buy a piece, which can attract a whole new wave of investors. Now here's maybe the biggest vote of confidence you could get from management. Even after that big miss in the first quarter, they didn't change their financial forecast for the entire year, not one bit. That sends a really powerful message, right? It says, hey, we see these problems, but we think they're temporary. We fully expect to bounce back and have a strong second half. Okay, so the plan is there, management sounds confident, but what did the market think of all this? And more importantly, what should we be watching for from here on out? Well, the market's immediate verdict was, let's call it cautious. The stock price dropped a bit after the announcement. It wasn't a total panic sell-off or anything, but it was a clear signal that investors were a little bit worried. Yeah, the general feeling out there seems to be cautious neutral, What does that mean? Basically, investors like the long-term plan. They get it. Focusing on the high-flying aero business, streamlining things, that all makes sense. But they are definitely worried about the short term. The big question on everyone's mind is, can management actually pull off that big recovery they promised for the second half of the year? It's all about the execution risk. So, if you're following the IHI story, here are the key things you need to keep your eye on. First, will those nuclear project costs actually settle down in the next few months like they said? Second, what's the real damage going to be from U.S. tariffs? Third, can they keep up that incredible growth in their aero-spare parts business? And finally, will they actually manage to sell off those other businesses they're trying to get rid of? The answers to those questions are really going to shape where this company goes next.
And that leaves us with one final big question. IHI has a solid plan to turn things around after this short-term stumble. But is that plan strong enough to turn this moment of weakness into the start of a really powerful long-term sprint? We'll have to wait and see. Thanks for tuning into The Explainer.